Hey everyone, welcome back to Bitcoin Dorks, your go-to source for all the latest news and updates on the world of cryptocurrencies. In today's video, we're going to talk about Bitcoin's current status and how the US jobs data has affected the cryptocurrency markets. As many of you already know, Bitcoin has been going through a bit of a rough patch lately. In fact, it's been trading in a range between $28,000 and $30,000 for quite some time now. While it did manage to climb up to around $40,000 earlier this year, it quickly came back down to where it is now. Many experts have been trying to figure out what's causing this stagnation in Bitcoin's price. Some have attributed it to the crackdown on crypto mining in China, while others have cited regulatory issues in other parts of the world. However, there may be another factor at play here as well: the US jobs data. Recently, the US Labor Department released data that showed an increase in job openings, which has led many to believe that the Federal Reserve may soon increase interest rates. The reasoning behind this is that when there are more job openings, it means that the economy is doing well, and that inflation may soon become a concern. To combat this, the Federal Reserve may decide to increase interest rates in order to slow down economic growth and prevent inflation from getting out of control. So, how does this impact Bitcoin? Well, as we all know, Bitcoin is a decentralized currency that is not tied to any government or central authority. As a result, it is not directly affected by changes in interest rates or inflation. However, Bitcoin's value is still influenced by many other factors, including investor sentiment, regulatory changes, and market trends. As a result, the news of a potential interest rate hike has had a significant impact on the cryptocurrency markets. When the US jobs data was released, Bitcoin's price dropped by around 4%, from around $32,000 to $30,800. This may not seem like a huge drop, but it's worth noting that Bitcoin's price had already been fairly stagnant for some time, and any significant movement is notable. What's next for Bitcoin? So, what does all of this mean for the future of Bitcoin? Well, as always, it's difficult to say for sure. While the news of a potential interest rate hike may have caused some panic in the cryptocurrency markets, it's important to remember that Bitcoin has weathered many storms in the past. In fact, Bitcoin has often thrived in times of uncertainty and instability, as investors turn to it as a safe haven asset. Additionally, there are many other factors at play in the cryptocurrency markets, and it's impossible to predict how they will all interact with each other. Overall, it's clear that the US jobs data has had a significant impact on the cryptocurrency markets and on Bitcoin's price in particular. However, it's important to remember that Bitcoin is a complex and dynamic asset, and that its value is influenced by many different factors. As mentioned earlier, Bitcoin has been stuck in a trading range between $28,000 and $30,000 for a while now. This is a stark contrast to the rapid price increases that we saw in late 2020 and early 2021, when Bitcoin reached an all-time high of around $64,000. Many experts have speculated about the reasons behind the stagnation. One of the main factors is likely the regulatory crackdown on cryptocurrencies in China. China has been cracking down on crypto mining and trading, which has led to a significant decrease in Bitcoin's hash rate, the computational power used to secure the Bitcoin network. This decrease in hash rate has led to a slower rate of Bitcoin transactions, which has made it less attractive to some investors. Additionally, regulatory uncertainty in other parts of the world has also contributed to the stagnation of Bitcoin's price. The US jobs data, which was released in early July, has also had a significant impact on Bitcoin's price. As mentioned earlier, the increase in job openings has led many to believe that the Federal Reserve may soon increase interest rates. When interest rates are increased, it can lead to a decrease in the value of stocks, bonds, and other assets. This is because higher interest rates make it more expensive to borrow money, which can slow down economic growth and cause investors to move their money into safer assets. The news of a potential interest rate hike has caused some panic in the cryptocurrency markets, and we've seen significant price drops in many different cryptocurrencies. For example, Ethereum, the second largest cryptocurrency by market cap, has dropped by over 10% in the days following the US jobs data release. However, it's worth noting that the impact of interest rate hikes on the cryptocurrency markets is not entirely clear-cut. While higher interest rates can lead to decreased demand for riskier assets like cryptocurrencies, they can also lead to increased inflation and a weaker US dollar. This can make Bitcoin and other cryptocurrencies more attractive as a hedge against inflation and a store of value. Additionally, if the interest rate hike is seen as a sign of a strong and growing economy, it could lead to increased adoption of cryptocurrencies as more people become interested in alternative investments. In conclusion, the news of a potential interest rate hike has had a significant impact on Bitcoin and the cryptocurrency markets. However, it's important to remember that there are many other factors at play and that the long-term trend for cryptocurrencies is likely to be upward. As always, we'll be keeping a close eye on the cryptocurrency markets and providing you with all the latest news and updates here on Bitcoin Dorks. So, make sure to subscribe to our channel and hit the notification bell so you never miss a video. Thanks for watching.